Welcome to Market Movers. I'm Jim Urio with Scott Martin.
Hi, Jim.
Okay, so we're 2 weeks away from the best, biggest week of earnings, and that's Tech Week. Okay, the FANG stocks have been pummeled a lot in 2018, recovered some. Are they still by far the main focus of earnings week, earnings season?
I believe they are. And here's the interesting thing, Jim, is we did see that pummeling in December, and now expectations, I believe, have been ratcheted down a little bit. We've already seen stocks react to maybe some at least disappointing outlooks, so therefore how the market reacts to maybe good numbers and disappointing outlooks is going to be interesting.
Okay, and the 30th we have Microsoft and Facebook, an interesting combination, something old, something new. We have then Apple, Google, Amazon on the 1st, 4th, and 7th. Of those things, what's going to be the most telling day?
Oh, Jimmy, you know I love me some Amazon, both the tech story and the consumer story. I believe that will tell you the story about how Q4 and the year will shape up.
Just for the sake of disagreement, I'm going to say that Microsoft Facebook Day, but deep down,
of course you would.
I know you're right.
Give us the honesty.
You're
Thank
right,
you.
though. Before we dive into our trade discussion, it's important to view these as examples, not as recommendations or advice. Scott.
Yes, Jim, looking at the NASDAQ today, the NQs, if you will, and just how the rally has taken such a nice shape over, say, year to date, I believe there's a chance, Jim, maybe for things to pull back a bit, just for the market to maybe settle down. Haven't seen a big move in interest rates yet, so to me that means maybe a risk-off trade is coming. So specifically, Jim, looking at buying the week 2 February 6,400, 6,350 put spread for 11 ticks. This trade risks approximately 220 to put on to make potential 780. Expires February 8th and has the underlying at 6640 in the NQs. Just because I believe this market's a bit overdone, that traces back to a breakout level in my opinion, and therefore this could also be a position you could manage as you put it on because it is kind of far away.
I'm perfectly fine with this trade, and I'm going to give the other side of the coin, but I like it for the same reason. The risk reward is there. We're talking about what, like 4% and below the market right now, maybe a little bit more.
And we haven't had a lot of volatility lately too, so this could be one of those periods where it starts to perk up, and therefore something could move in your direction.
And if volatility is gone for good, well, heck, then you
we're all happier.
Then you lose your $200, whatever. You know what I mean? I'm looking at it the other way, and I think, by the way, this 2,600 level that we're flirting with in the S&Ps is going to be a big signal of risk on, risk off. But here's what I'm thinking about doing: buying the week 2 Feb 6950, 7,000 call spread for 10 ticks. Very similar to yours. It risks 200 to make 800. And the point of this to me is that if you have 3.5 weeks, you're looking at the NASDAQ and what we've seen over the last year. If you're going to tell me that that's the proper risk reward, or whether this market could be 5% higher or 5% lower in 3.5 weeks, I think it's crazy. I thought it was a good deal.
And given all the earnings that you laid out earlier in MM about how we have ahead of us, could easily move the NQs 4, 5, 6% over the next couple weeks. I like the expressions.
Okay, how big is this? Because we've zapped out all the expectations of earnings season over the last month. And part of that in the tech world has been the trade talks with China. If we see something that's meaty and important in the China talks comes out in the next couple of weeks, it's going to be a huge deal, because these are the tech stocks that are affected most, right?
It is going to be a big deal. And what's great about the futures market is we get that round-the-clock access. You get that capital exposure that you desire to put on, a nice position or two. And that's the other interesting thing, too, though, Jim, is looking at the China talks. We still have government shutdown going on. We still have the Mueller report. I mean, there's other things that the market could turn its attention to that may affect the trade.
Thanks for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.